Good morning, everyone. You all were there, no? Yesterday's class. You join even online. Because it's a serious issue, no? You won't understand anything today's one. Did you watch the recording at least? No. Right, okay. Few more to join, right? So yesterday we started the concept called transfer pricing. So another important area where in your syllabus, there's a chance of getting the questions where in the exam either sections B or C. Before we get started with the transfer pricing, we talked about responsibility center. Under responsibility center, you would see there are four centers. One is a cost center, the division which is associated only cost, right? They don't focus on the what do you call revenue. The performance measurement for that particular divisions would be cost per unit, cost variances. This is what is known as cost center. Second, we talked about only the revenue center, the division which is responsible for generating only what revenue. They are focusing only what sales revenue, right? Then selling price, sales revenue, sales price and volume variances. That is the performance measurement for sales center. Then we talked about another two more important centers or division. One is a profit center, the division which have both cost as well as what revenue. Then only they would be able to identify the what profit. But these profit center managers does not have authority to enhance the investment limit. He has to function based on the amount which has already invested. That is all about what profit center. Then we talked about what investment center. That center or the division which is responsible for the return for their investment, ROI, return on investment. So that in this particular investment center, what we did was we talked about there are two main performance measurement. One is ROI, that is similar to ROCE, return on capital employed. So how to calculate ROI? We said what you remember controllable profit. Controllable profit. Because why I have used the word of controllable profit? The division should be controlled or should be evaluated the performance where they have a control on it. We can't check the performance where they do not have the control. Say for example, head office expenses. To check their performances, we can't subtract or we can't give a portion for that head office expense to that particular division. That's very unfair. That expenses which is borne by the head office, we can't pass it to them. That's why we use the word controllable profit. I have explained one example how to calculate controllable profit. We did this part yesterday. Therefore, not the net profit, but in financial accounting, you would have learned the way of calculating ROC, return on capital employed, net profit divided by capital employed. Here, controllable profit, the profit which is controllable by what? That particular division divided by what? Controllable capital employed or net assets. That is the way of calculating ROI, return on investment, or ROCE. Both are same. Second, another very important technique. We discussed the way of measuring or assessing the performance of that particular investment center, RI, residual income. What is exactly meant by residual? The name itself is giving you the meaning, residual income. What is meant by residual income? Your controllable profit minus capital employed times what? Cost of capital or notional cost of capital. How? You have an investment, 1 million. if you put that 1 million into the capital market, you'll be getting the return. Capital employed times what? Cost of capital is what? Your return. What is your division has made a profit? Whether that is what more than the market return or less than the market return. That is the lamest example for understanding what is exactly meant by residual income. That is another matrix that is used to evaluate or assess the performance of the investment center. Then only we started the concept called transfer pricing. So we did the long story with the example and all what is exactly meant by transfer pricing. For the timing, you just try to remember, you may be having a multiple division where in your company, because the owner or that one person cannot run the company alone, because business has grown. The meantime, your complexity of the business also has been increased. Now one person can't control all the activities of the company. Therefore, this owner will form a team. He will split the company into a division, right? The intention of splitting the division to what? Maximize the company's profit. Maximizing the company's profit. How to maximize the company's profit? By maximizing the divisional profit. Then he will appoint a manager for each division. The manager will work on behalf of owner. On behalf of what? Owner. So we can't allow them to work the way they want. So end of the day, they will be check their performances. Based on their performances, they will be rewarded. In other words, they will be given the bonus. So since they are working for bonus, since we are dealing with the human beings, not machine, their intention is to maximize the divisional profit and to get the bonus. So ultimately, it will damage the company's goal congruence, corporate objective, right? Then what the owner will do, say for an example, I have brought a very best example with regard to the transfer pricing. Let's say one division in your company is making a circuit board, another division is making the final radio. To make the radio, you need the circuit board. Circuit board which will be issued by the Division 1 to Division 2. If the Division 2 is not getting the circuit board, they can't make the radio. Company's operation is making the digital radio to the market. So this Division 1, what they will do is, since they were given the complete autonomy means what? Authority and powers. What they will do is, they will be check the performances. This division will be check the performances. Then what this division will do, why I'm going to pass this component to next division? I can sell this component to the external market. I can get the profit. Then I'll be given more bonus. Then the division 2, what they will do? They will be waiting for the components, because without getting the component, they can't make the radio. End of the day, what will happen? It will damage the company's operation. Company will not be selling the radio, will be selling the component. To sort out this problem, company played a trick. It's all about tricks and hacks in management accounting. The company, what they will do is, company will advise to the divisions, one, okay, you pass the component to division 2 for price. Don't pass it as a free, but the general operation is you will make the component, you will pass it. But now what they are saying, pass it for the price. You do a business inside the company. End of the day is profit for the company, no? Because profit in the company, for company is nothing. One division is income, another division is expenses, no problem. As far as the company is concerned, it will be everything is will be set up. Intercompany transaction. Am I correct? Then end of the day, what will happen? This division 1 will pass it to the division 2. Then finally, they will be getting the final output to achieve the company's goal congruent. When they are passing this component from division 1 to division 2, they will be charging the price. That price is known as transfer pricing. That price is known as Transfer pricing. there are numbers based what we can decide the transfer price. One is a marginal cost, another one is about total cost, another one is a marginal cost plus opportunity cost. Second part is what? Market based transfer pricing. The amount what you are selling this division A, they will check the market price. How at which price they are selling into the market for this component, which is what circuit board. Same price they can sell it to the what? Internal divisions. So the price which is known as when they are passing from one division to another division, the price that they are charging is known as what? Transfer price. So that we discussed for 2 hours, stories and all, baking a cake. Am I correct? Then only we have come to the what? Radio example. Why I have taken a radio example? Since we did that part where in the target costing. Then we started a few questions where in the past papers with regard to the OTQ only. Then we discuss about what? This question, bath and fittings. I'm pretty much sure that you would have got the what questions. So we didn't get the answer for this question. This is the summary of what the questions. So whenever you get a questions where sections C, B or A anywhere with regard to the transfer pricing, sketch the what diagram. It's very easy for you to what tackle the what answers. That is my small advice to you. Right? Don't attempt any question without what sketching the what diagram in the exam. Because you know why? Now look at the question. It's given as a 1 page. The whole 1 page I just put it in the 2 boxes. Now I need to go back to my questions. From these I can access the what answers. Right? The people who were absent yesterday's class, just try to go through the question and look at the what you call my diagram, please, for 5 minutes. I'll give you 5 minutes time. We are going to start off at getting the answer for the first part. Emily, were you there yesterday's class? Don't forget that you are having a mock paper on Friday. Please attempt the mock paper. No problem about your marks. No problem at all. Then only you will have a experience how the paper which would be tested by your exam. It will be a great experience. Mock, no? The name itself, it says what? Mock. Friday, most probably after your lunch break. We'll fix it 1 to 4 or what 1:30 to 4:30. You let me know the convenience time. We can fix it. It's up to you. I'll be done the session on Friday 12:30. Then you let me know the time that you are, because I think some of them won't be attempting the mock. They think that they don't know anything. No problem. You have a 4 or 5 days time. 4 or 5 days time. You try to go through everything what I have taught you. Something you will get in your mind. Some marks will be there now in your paper. 20 or 30 or 40 or 50 or 60 or 70. Some marks will be there. That will be the turning point for you to what? Pass the exam in your real paper. Maybe what? March or June. Do it as a for a mock practicing. Just we are going to practice. That's all. I'm not going to evaluate your real performance through the mock. Just you have to know how the paper will be. Then you will get prepared based on that. That's the reason I'm telling you to go for a mock exam. I think the people are joining through the online. You also can do the mock paper, but don't access from the different sources and uploading the marks. Sorry, uploading the answers. End of the day, you will be cheated yourself. Am I correct? Say for an example, I'm giving you questions. I'm giving you all the questions. You are trying to get the answer from your friends and you are trying to upload that one. Or you are trying to get from the different sources. You upload. You think, I have got the correct answer. I got a good mark. Ultimately, you are trying to cheat to the what lecturer. You will be cheated. Do you agree with me or not? Because you are a mature student, you should exhibit some sort of a maturity. It's up to you because I can't force anyone to do that thing because it's a professional course. Am I correct? End of the day, board pass it to you, not for the lecturer. Why? The end results, who is going to face yourself? Just go through the question and just have a look at the, my table. Those who were absent for yesterday's session, those who missed out the yesterday's session. Because I can't go and explain again, wasting time. There was a small, bit of argument between myself and Sanjana with regard to the yesterday's small requirement. Both answers are correct. My answer as well as what Sanjana's answer. Both answers being uploaded via in your past papers. They said what alternative approach and the what normal approach. We'll discuss. No worries. I think here some of the information is hiding. I'll erase and put it. Fixed cost is 7,440,000. Sorry, 7,440,000. Fixed cost 7,440,000. Then productions and sales 80,000. Capacity also. Market demand, maximum annual market demand 80,000. Market demand also 80,000. I'll tell you the story of this question. Bath company has a two division. One is a division A, another one is what? Division B. Division A is making the final product, which is what we call bath, including what main component and the what fittings. Fitting, which is made by division B. So division B, what they do is they will pass it to the what? Division A for price. The price what they have already agreed as of how much? $75. Every one fitting, we will give it to you the rate of what? $75. Meantime, division B, the same fitting can also be sold out for the via the external market for the price of how much? $80. Because division B, they can sell it for what? $80. The same fitting, they can sell it for $80. Correct? Now, there's a problem with regard to the information that has been given for B and A. If you look at B, capacity is what? 200,000 fittings, which means they can make maximum 200,000 fittings. External demand is how much? 180,000. And internal demand for A, how much? 80,000. You tell me the truth. When you are passing to what your next division, you are going to get but 75. The same unit, when you are giving to what external customer, you will be given how much? $80. If you are given the bonus based on what your performances, your divisional performances, what you would do? You tell me the truth. You tell me the truth. I'm talking about the reality. If you are passing to your same company in other division, for every one fitting, you are getting the price is how much? 75. Same product, if you are going to give it to the external customer, you are going to get how much? 80. Which sales that you prefer in reality? External, since you can gain what? More profit. Since you are going to get more profit, you will be given a what? Bonus. You will check the performances. Am I correct? Now only the problem would arise. Now what this division B will do, if they have given the complete autonomy, what is meant by autonomy? Authority and the powers being vested to them. They can do whatever they want. They can do whatever they want. Then B, what they will do is, they say what? Okay, my capacity is 200,000. I will give what? 180,000 to the what? External market, and 20,000 I can give it to what? A. For that $75. That is the argument for division B. So division A will go and report to the what? Head office. We can make only 20,000 units of what? Path fitting. But the market demand is what? 80,000. But division B is saying what? They can give only what? 20,000. Now only the head office will interfere on this matter. The head office says what? No. B, they say, first, whatever you are making, first priority should have been given to what? Division A. If you have a balance only, you can sell it what? Outside. That is the first part of the requirement. So when they are giving to B, when they are giving to A from B to A, they'll have to set the price. What is the price that they are going to give? The price what they have already agreed what? $75. That is the Sanjana's argument. What I am telling, if you do a further investigation with regard to the what? Market demand and the internal demand, market demand is what? 180,000. Then the division B says what? Okay, I will give you 80,000. Based on your requirement, I can give you 80,000. But it should have been given the two consignment. But that 20,000, I can give it to you the price what we have agreed as about $75. But another 60,000, I can't give you the price what we have agreed because there is an opportunity cost. What is meant by opportunity cost? In case if I'm not going to give it to you, I can sell where in the market for how much? 60. Therefore, the division B says what? I will give you 80,000 based on the what head office you have given me the what guideline, but I will give you in two consignment. 160,000. Sorry, first 60,000. Yeah, it's here. 80,000, 60,000 at a price of what? $80. And another 20,000, I will give you the price of what? $75. Or what Sanjana said also is correct. Sanjana said what? No, since we have already agreed at a price of what? 75, all 80,000 can also be given at a rate of what? 75. That is also correct. But what I am suggesting, based on the opportunity cost perspective, that should have been given, but you will be given anyway, or you will be getting the two different profits, no problem. Both answers, marks will be provided. That is what they have given. But it's not applicable for each and every question. For this question I'm talking about. Because there are number of problems that we will face deciding the what? Transfer pricing. At which price that we can transfer it to the internal divisions, right? So my argument will go 60,000 at a price of 80 and what? 20,000 at a price of what? 75. Now let's calculate the profit based on what? Current approach. There is no specific format. Any format is okay as long as what you get what? Correct answer, right? First I'm going to put the divisions A, right? Division B, and this is for the whole company, right? Let's look at the first sales. If you look at sales, there are two types of sales. Am I correct? One is what we call external sales. External. Another one is what? Internal. Intercompanies transaction. Right? If you look at A, the entire amount they are selling to what? External party. Look at 80,000 is a market demand. They are selling at a price of how much? What is the selling price? 400 $50. Am I correct? So here 80,000 at 450. I'll put 3 zeros on the top. It's easy for me to get the answers. Otherwise, number will become very extensive. 3 zeros on the top, right? 80,000 times 40. Sorry. How much? I just put 3 zeros on the top. Make it fast. Getting late. 20? Yeah, we'll put with the 3 zeros top. 36,000. Correct? There is no internal sales for A because A is selling only what? To the external customer. A is the final divisions, right? If you look at B from just have a look. B, their total capacity is what? 200,000, right? Their total capacity is 200,000. Since they are passing 80,000 to the internal, they can sell external only 120,000. Am I correct? External, they can sell it for only 120,000. Therefore, what is the external sales for B? 120,000 times. Just put the working for it also. That's good. 120,000 times. What is the external selling price? 80. 80, no? 80. How much then? 9,600. 9,600. Just take. Are you sure? 12,000 times 80. 50 now. Sorry? Okay. Okay. $9,600, no? Yeah, 9,600 with 3 zeros on the top. Okay, no, I'm asking without 30, 80 times 4, sorry, 12 times 80. Yeah, 960, no? 960. Right? Internal sales, for A, nothing. Am I correct? For B internally you are selling, no, that is not 12,000, no? 120,000, no? External sale. External sales is 120,000 times what? 80, which is 9,600. Not, you are correct. 120,000 because total production is 200,000. Out of 200,000, you are selling external party 120,000 at a rate of what? 80, therefore 9,600. As far as the company is concerned, total sales is how much? 45,600. Is that clear? Is that clear? 45,600. Clear? Right, okay. Internal sales for the A, nothing. For B, as I have told you clearly, there are two options. One option, you can take it entire 80,000 at a rate of what? 65. Sorry, 75. Or based on the my suggestion, first 60,000 you can give it to what? At a rate of 80. 20,000 you can give it to at a rate of what? 75. Then altogether how much? Internal sales. 60,000 times 80 and 20,000 times what? 75. Were you there in the yesterday's class online? Sanjana, are you with me? Your answer also correct. Your answer also correct. This is another suggested answer they have given. 4,000 together. Together, both 60,000. Sorry, 6,000 together 6,300. That is the internal sales. As far as the company is concerned, it's not a sales. Why? It happened for the what within the company. One company is sales, another company is what cost. Do you agree with me? One company is buying from, sorry, one division is buying from what? Another division, the same company. One company says what is my income. Another company says that is what cost. As far as the company is concerned, it's nothing. Thank you, Priyanka. Now let's quickly calculate the cost. Let's quickly calculate the cost. Before that, I just want to add small point with regard to the what variances what we have calculated operating and planning. I don't personally I don't agree with the ACCA hub. For that, you remember we discussed about planning price variance and the what operating usage variance. I don't agree with that formula. Also, they suggested the combinations of what operating price and the planning price equals to what total price. For that also, it's a fundamental problem. I don't agree, but anyway, the method that I have taught you is what is where in the Kaplan. But all the other professional bodies, we do teach the method what I have taught. What I have taught you. Because why I have taught you the both as a student, you should know both. If somebody asks from you, am I correct? You don't only rely on what ACCA. Sometimes you may be doing what some other professional courses in future. Then you may think that this person who have taught us this way, but this curriculum says the different. Am I correct? That's the reason I have taught you both. What I have suggested is what most accurate than what is given where in the Kaplan, which is available but some other professional courses as a evidence proof. Also, they say what total operating variance equals to what operating price and planning price. That is wrong. It's not a combination of total price variance. That's the reason Sanjana, who gave me the total answer is equal total variances, I have shown separately. Don't add and show it to them. Show it separately. That's not a problem. Right, okay. Come back to the point. Now let's calculate quickly the cost. Quickly the cost. We can quickly finish it off the A. Right? A, they are selling 80,000. Am I correct? They are selling 80,000. Then what is their material cost? Material cost. 80,000 times what? Sorry? 200. Therefore, how much? 1,600 or 16,000? 200, no. 16,000. 16,000. 16,000. One more cost to be included. What is that? That's also correct. Before labor cost, there's another cost for A. They paid something for someone. Very good. They both the fitting from the what division B. For that is also the A's perspective. It's a what? Expenses. B's perspective, it's a income. Am I correct? A's perspective, it's a what? Expense. We can call it as what? Transfer cost. Transfer for cost for fittings. Fittings, which is how much? 6,300. Right? Next one is what? Labor cost. How much? 80,000 times 45. So then 80 times 45. How much? 2,600. 3,600. Now let's get the what contribution. Sorry, 3,600. Not 36,000. Let's get the contributions. What is the contribution? 25,900. And they have given the word fixed cost, which is 7,440, correct? For division A, am I correct? 7,440. Now we can get the word profit. How much? Is it correct? Contribution is how much? 10,100 contribution. 10,100. That is the answer that I got from Priyanka. Addition and subtraction. 36,000 minus 6,300 minus 16,000 minus what? 3,600. Sales minus variable cost equals what? Contributions. That would give you how much? 10,100. Is it correct? 10,100. Then what is the profit? 10,100 minus 7,140. $660. Right? Next one, division B. Division B. They are manufacturing anywhere 200,000, right? There's no transfer cost. Manufacturing 200,000. What is the what do you call material cost for them? 200,000 times. Material cost for division B. Material cost is 5. Labor cost is 15. So then 200,000 times 5,000. Is it 1,000? 1,000. How we have got 1,000? 2,000. Sorry, 200,000 times what? 5. Next one is 200,000 times 15 is the labor cost. How much? 3,000. 3,000. Right, okay. Now we can get the what contribution. What is the contributions? The total sales is 15,900 minus 4,000, 11,900. Just check whether I'm correct or wrong. Then fixed cost is how much? Fixed cost is given in the questions. 4,400. 4,400. Then we can get the what profit, which is how much? 7,500. Am I correct? Let's double check whether we are getting the same answer for the total. The total material cost for the company would be 16, because this is nothing, transfer cost. It's an intercompany transaction, right? Unrealized or realized transaction. You have done that part where in financial accounting, right? So 16 plus 1,000, which is what? 17,000. So here 6,600. Now we can get the what total contribution. Here 840, 11,840 fixed cost. What is the contribution here? 45,600 minus 17,000 minus 6,600. Sorry? 22,000. 22,000 minus 11,850. 10,160. 60, 40, no? Here. 10,160. Now check whether you are getting the same answer if you work like this also. What is that? Correct. So that is how many marks? 9. Are you all okay? Online? Students? Sanjana? Priyanka? How about Sanjana? Are you okay? Navya? Malavika? No sounds from you. Thank you. Emily? Make it fast. Before the break, we'll have to do another past paper question, 20 mark question. Are you all done? Okay, this is the current approach. Am I correct? Current approach. Since this approach, the autonomy was not what given. Now, this transfer price which was set by the previous part divisional manager, now both divisional manager being but replaced. Also, the head office being given a what complete autonomy. What is exactly meant by complete autonomy? They can do whatever they want, right? But anyway, practically what I'm telling you, what I am suggesting, we can't give 100% what autonomy. But at the same time, we after giving the autonomy, we can't tell them don't do that one, don't do this one, do it this way. That's also wrong, right? The autonomy should have been given for certain extent, for certain extent, because that autonomy through the autonomy, company should maximize the company's profit. In other words, the goal congruence should have been what achieved. You got my point. Uh, but current approach, which division is having a disadvantage? Which division is having a disadvantage for the current approach? It is biased for one division's current approach. Which division is having a disadvantage? A or B? This approach, what I have put on the screen, which division is having a what disadvantage? Very good. Yes, Sanjana, you are correct. Priyanka, you're wrong. It's a bit of a disadvantage for what division A, because one reason this 80,000 what we have got from what division B for the two consign, one at a price of what 75, sorry, 60,000 at a price of 80, same as the what market price, right? Another we got the price what they have agreed. That is what unfair. Second thing is same fitting. The division A can be obtained outside the market or what in the market, at a price of how much? 65. Do you all agree with me? Therefore, please make a note on that. This system is Bit of a disadvantage for division A. Bit of a disadvantage for division A. Since same fitting can be obtained, in the external market, at a price of $65. At a price of $65. Agree, no? Do you understand what I said? So it's because who is going to get the benefit through what this approach? Division B. Why? Division B, what they are going to do is, end of the day, their capacity is what? 200,000. Just imagine, their capacity is for 200,000. From 200,000, the 180,000 is external market. For all 180,000, they are going to enjoy the profit for same price what they are going to charge for the external market. Do you agree with me? Another 20,000, in case if A is not going to buy, what will happen for that B? In case the remaining 20,000 fittings, if A is not willing to buy from what B, what will happen for that 20,000? It will be buy in the store as a stock. Do you agree with me? Then what will happen? Divisional profit what? Will decrease. Then again what? Company's profit also will decrease. Due to the what? The stock is what? Where in your company. You got my point. Am I clear to you? Therefore, it's this current approach, which a bit of a what disadvantage for division A, because they are getting the fitting for 80 and 75. The same fitting can also be obtained where in the external market at a price of what? $65. Now let's move on to the what? New approach. What is the new approach? Just have a look. The requirement. Head office is considering changing the transfer pricing policy to ensure maximizing of company's profit without demotivating either of the divisional manager. Division A will be given autonomy to buy from what external supplier, and division B to supply external customer in priority for supplying the division A. Calculate the maximum profit that could be earned by both company, transfer pricing optimized. Now full complete autonomy being what? Given to the both divisions. You do whatever you want. Can you calculate the profit quickly? Right. Before we start of getting the answers, you tell me now what they are going to do. Division B, what is the maximum capacity? 200,000. What is the external sales? 180,000. Then first they will sell it to the external party at a price of how much? 180,000. Excuse me, just have a look. They will sell it to the what? External sales is what? 180,000. Now there's the balance of 20,000. That 20,000, they will go and ask from what division A? We are going to give you what? At a price of what? 80. They say what? I can't get it from you. 80. Then they say what? No, we'll go for a what? Transfer price, but we have already agreed 75. They said what? No, I have given a complete autonomy. Same item I can buy from what external party at a price of what? 65. If you're going to give it to me at a price of what? 65, give it to me, I'll take it. Will it happen or not? Then the 20,000 will be transferred at a price of what? 65. The remaining 60,000 they will buy from what? External. Got my point. But still A has a supreme power now. A still can argue with B. Give me for the what? Marginal cost. Give me the 20,000 for what? That's why very difficult to decide what the transfer price. But for the outlook, what we can say, we will go with the what? Same as what? Market price, what they are getting. We'll give it to, because that's amicable. No? So both party will be what? Happy. Am I correct? That's an amicable one. What? 65, the same amount what they are paying to the external supplier. And these people also will say what? You try to get from me also that 20,000. I'll give it to you for what? 65. With that, we'll have to calculate the profit. We'll see whether that giving the autonomy to the what both division, whether it's what enhancing the what company profit or not. We'll double check. Are you all done? Sanjana has got 3,760 and 7,300, company 11,060. We'll double check Sanjana. I can give you another 5 minutes. Priyanka 3,760, 7,300. I think correct, since you all have got the same answer, both Sanjana and Priyanka. Excuse me, in the exam, there are some figures would be same, right? Therefore, no need to do a calculation. You can copy and paste it. Some figures. So only few figures will get what change if you are changing the approach. So that part only you have to do the calculation. That's the way of what saving time when the exam, right? So if you look at company A, external sales will be as it is. Do you agree with me? That is how much? 80,000 times 450. That would give you 36,000. So there's no internal sales. Agree with me? For B, now external sales would be 180,000 times what? 80. Agree with me? Then that is how much? For B, 180,000 times what? 80. That is how much? 14,400. And there's the internal sales for B, which is 20,000 at a rate of what? 65. They can't go for 80, right? They can't go for what? 75. They can go only for what? 65 after giving the complete autonomy, because the same price only the external supplier who is supplying the fitting with the same quality to the what? Division A. Therefore, B also can give at a price of what? 65. That would give you how much? 1,300. As far as the company is concerned, the internal sales is not a what realized transaction. The total sales would be 50,400. Now let's quickly calculate the what cost. Cost. First one is a direct material cost. Direct material cost. It's very easy for B. Quickly shall we fill the B? B how much? Direct material. Same. 200,000 times what? 5, which is what? 1,000. 1,000. Total sales would be 700. 15,700. Correct? And the direct labor. Direct labor. 200,000 times 15. Am I correct? 3,000. Now you can get the what? Contributions. Correct? What is the contribution? 11,700. Now you can deduct the fixed cost. That is 4,400. 4,400. Now you can get the what? Profit. 7,000? 7,300. Now quickly we can finish it on the B. Almost the figures is quite similar. Only one place it got what? Differ. That is what? The sales. Right? Internal sales. Now if you look at product A, direct material cost is there. 80,000 times what? How much the price? 80,000 times 200, which is how much? 16,000. Correct? $16,000. And division A having a transfer cost that is there, which is how much? 1,300. In addition to transfer cost, there's a what? Purchase of fittings. Only 20,000 fittings are transferred from the what? Division B to what? Division A. Then another what? 60,000 fitting they'll have to buy from what? External supply. Then the purchase cost. Purchase cost. Purchase cost. 60,000 at the rate of what? 65, which is how much? How much? 60,000 times 65. 3,900. 3,900. What is the labor cost? Labor cost is how much? 45. Am I correct? Then 45 times what? 80,000. How much? Same amount. 3,600. Now you can get the what? Contribution. What is the contribution? 11,200. It cost is 7,440. Therefore, what is the profit? 3,700. Right? Now let's calculate the company as whole. Total material cost is what? 17,000. 17,000. Transfer cost is nothing. And the purchase cost would be there. 3,900. Correct? And the total labor cost is what? 6,600. Total labor cost is what? 6,600. What would be the contribution? 22,900. Then the fixed cost is 840. Then the profit is 11,060. Right. Now you remember we talked about what autonomy. We talked about autonomy, which means what? We are giving the complete authority and powers to what? The division to run the business or to run the division the way they want. After giving the autonomy, see, our company profit has been increased. 10,160 has been increased to 11,060. In other words, this autonomy has what worked, but at the same time, as far as the divisions B's perspective, their divisional profit has declined. 7,500 has come to how much? 7,300. 7,300. Since they are supplying the remaining 20,000 unit at a rate of what? 65. Can you make a note on that on your own English words? After giving complete autonomy, overall company's profit has been what? Increased. But at the same time, division B's profit has been reduced. Shall we move on to the third part of the requirement? How many marks? Theory based requirement. What is the requirement? Requirement says discuss the issues of encouraging divisional managers to take a decision in the interest of the company as a whole, where the transfer pricing is used. Provide a recent recommendation of a policy board should adopt. Discuss the issues of encouraging the divisional manager to take a decision in the interest of the company as a whole. What are the issues first? Let me know the issues. What are the issues? After giving complete autonomy, right, for both divisions, the first issue that these companies, because we'll have to talk about not what is there in my PowerPoint or the study material for this company, they are trying to get the what fittings. Who the division A is going to get the fitting from where? External supply. What is the surety of the quality of the material? Whether we can get the what same quality what we are getting the internal division. That is what questionable. If that is questionable about the quality, it will damage the company's end product. If they are going to damage the company's end product, what will happen? The company's future sales and the future market share will get dropped. That is the one part that you'll have to discuss. Do you agree with me? One part that you'll have to discuss. Second, it's a very important thing. The division A says what? I can get the fittings where in the market at a price of what? $65, right? If the fitting is available with the same quality in the market for $65, what is the surety of B's this 14,400 sales? Why? B says what? I can sell to the market for what? At a price of how much? Same fitting. B is selling where in the external market for what? $80. Same type of a fitting which is available to purchase for this division A at the price of what? 65. Then what is the surety of what this what B sells? If that is available where in the market at a price of what? 65. That should have been considered. You got my point. Also, the transfer pricing, sometime what will happen, they try to act dysfunctional. Who the divisional managers, instead of working the company's benefit, they try to work for the what? Self-interest or divisional benefit. These are the things that you need to discuss in the part C. Have to quickly mark this idea. Take down. The supplier may not be reliable. May not be reliable, as we cannot assume. We cannot assume that they will be in the market for a longer period. Longer period. Also, they may tend to increase the price in the future. That will impact A's divisional profit and company as a whole. Right? That's my another question. After giving the complete autonomy to what both division, A, they can do whatever they want. B, they can do whatever they want. If that is the case, if A is not willing to purchase the 20,000 units from what B, if A is refusing to what purchase that 20,000 units from what B, what will happen for the B's what profit? It will get what drop. Then what will happen? The company's profit, it will get what reduce. Ultimately, it will impact the what company's what goal congruence by introducing the what transfer pricing. By introducing a what transfer pricing. You got my point. This also can be, but each and every point, see that I'm highlighting with regard to the what this company. I didn't bring any points from the what where the study material. That is your examiner's expectation. Examiner is expecting you to give the answer from the case, not what is in the material with regard to the what theory based requirement. You have to be very careful. Don't memorize everything in your study material. Study material just to have a look with regard what are the advantages, what is happening. Then connect all those parts to what this company. Then only the marks will be provided. Am I correct? Second point, just quickly take down. Suppose the division A is not going to purchase the remaining 20,000 units from division B. Division A is not going to purchase the remaining 20,000 units from division B. The spare capacity at division B will get the spare capacity at division B will make a loss, which would impact the goal congruence of the company. Which would impact the goal congruence of the company. Right? So another 2-3 points. I'll give you the point form. You just expand it at home because we don't have a time. Next one is divisional managers will be demotivated. Divisional managers will be demotivated. Right, next point. We'll have to expand that one, right? Next point. If the fitting is available, where in the external market at a price of $65, $65, what is the surety that B is going to sell at a price of $80? True, no? Which is what? Questionable. Do you all agree with me? If the same item which is available where in the market for $65, then how that B can sell for $80 where in the external market? It's questionable, right? And you can talk about the competitors. Sometimes they may increase the price in future. If they increase the price in the future, then what will happen to the A's cost of the product may increase. You got my point. There are a number of points that you can highlight with regard to the what issues of what this transfer pricing for what this company. I hope you understood. So again, I'm telling you, nothing has taken from what my study material. All the points that I have highlighted only from what this particular case. Therefore, try to thoroughly understand the case. But in the exam, you have to be very careful of the reading time. So when you are reading first time itself, you try to absorb it, try to sketch the diagram the way that I have shown you, and start to work off what getting the answers in the exam. Are you clear? This is 120 marks complete questions. We did it. We are going to do another one more question now under transfer pricing. Then another one more question we will give you to as a homework, because we can't keep on doing that what the transfer pricing each and every classes, right? So with the next question we will stop it. That is what Portable Garage Company, June 2018 questions. Let's try this question. So first you'll have to sketch the diagram. Don't forget, sketch the diagram. I'll take it. You have shared the group, no? Right. Portable Garage Company. Very good question, this also. You try only the first 9 marks. 9 marks. The rest I will explain to you. Right? Those are very, very important things when it comes to transfer pricing. Part B, part C, bit of a calculations required to do explanations. I can give you maximum another 5 minutes. Uh, Sanjana has got the answers. 7,590, 1,000, and total is 7,690. What about others? Are you all backing the answers? Shall we get started? Only Sanjana has given me the answers. She says answer is what for B 7,590 without 30, top 3 zeros. Another one is 100. Company's one is 7,690 on the top 3 zeros. Priyanka? Shall we start? This is what Portable Garage Company June 2018 past papers questions, 20 marks question. Look at, because why I'm telling you to read the questions A to Z, that may help you to answer for the theory based questions. Therefore, you'll have to read the question, take the summary of the questions, right? The Portable Garage Company is a company specializing in the manufacture and sale of what range of what products for motorists. It is split into two divisions, the battery divisions, division B, and adapter division, division A. There are two divisions. One is division A, another one is what? Division B. A, B. B is what? Division B. Adapter division is what? A. Adapter. Adapter. B is battery. B sells one product, portable battery charger for motorists, which can be attached to a car own battery and used to start up an engine when the car's own battery fails. Division A sells adapter which are used by the customer to charge mobile devices and laptop by attaching them to the car's internal power source. Recently, Division B has what upgraded its portable battery, so it can also be used to rapidly charge mobile devices and laptops. They did the what innovations. Who? Division B, right? The mobile device or laptop must be attached to the battery using a special adapter, which is supplied to the customer with the battery. Division B currently buys the adapter from Division A. So Division A only giving you what? For B, what? Adapters. Am I correct? Adapters. The Division B currently buys the adapter from Division A, which also sells them externally to the other companies. They are selling to the external to other companies. The following data is available for both division. It's easy now. If you look at Division B, selling price for the each portable battery, including adapter, selling price is how much? Selling price is what? $180. Correct? Cost for a battery, adapter from Division A, that is what? Transfer price. Transfer price for adapter, $13. Correct? Other material cost from the external supply. Other material cost, which is how much? $45. Next one is labor cost, $35. Labor cost, $35 per unit. Annual fixed overhead, 5,460,000, right? Fixed cost, 5,460,000. 460,000. K stand for 1,000. Annual productions and sales, the production is 150,000. Correct? Maximum annual market demand, 180,000. Problem. There's a problem. What's the problem? Their market demand is what? 180,000. As long as if they are making 180,000, right? If they are getting sufficient adapter from what? Division A, they can maximize the what? Divisional profit as well as what? Company's profit. But now the problem is their capacity is only what? 150,000. That may be the reasons why they are getting only 150,000 adapter from what? A, or maybe other reasons. Don't know. Let's talk about Division A. Selling price per adapter to B 13. That is already we have marked transfer price. External selling price is $15. External selling price $15 per adapter. Cost per adapter, material cost is $3. $3 per unit. Labor cost is how much? $4. Labor cost is what? Sorry, $4. Labor cost is $4. Annual fixed overhead 2.2 million. Fixed cost 2.2 million. Okay. In addition to the material and labor costs above, Division A incurs the variable cost of $1 adapter for adapter it sells what? Externally. When they are selling externally, they are getting that variable selling expenses. Not for the internal sales. That is applicable only for variable selling expenses. $1 only for what? External sales. Correct? And their annual capacity or production. Capacity or production is 350,000. Production or capacity 350,000. And external demand 200,000. That's the reason Division B is selling only how much? 150,000. Why? Division A says what? Our capacity is only what? 350,000. Out of 350,000, I'm going to sell 200,000 to the external market, which I can earn what? Selling price of $15. Whereas if I put it to internal market, my transfer price is what? Only $13. Therefore, first I will focus what? My external sales. The remaining 150,000, I will give it to you. But if these people would have given what? 180,000 to what? B, they can maximize the profit. Divisional profit will increase and the company's profit also will increase for certain extent. But we'll have to consider the opportunity cost as well, because when they are transferring entire 180,000 to the what B, they will be losing a what external market sales. So the divisions A's perspective, they'll have to check about the opportunity cost. Am I correct? We'll see that part. The manager of division B is unhappy. Division B's manager is what? Unhappy. They have special industry contract who they could buy the adapter from exactly the same price charged by the division A if they were given the what? Autonomy to purchase from the outside the group. So division B, they are unhappy with the what? Division A. Why? They are giving only how much? 150,000 adapters, because the requirement is what? 180,000. If they are given a what? Autonomy, complete autonomy, the way they want to do a business, right? They can buy the same adapter from the outside the market at a price of what? $13. Therefore, external purchase price of the adapter, external purchase price adapter, same amount, $13. After discussion with the both of the divisional manager, to ensure that the managers are not demotivated, head office has now agreed to change the purchasing policy to allow the division B to buy externally, provide that it optimizes the profit of the group as a whole. Now the autonomy being given, you just try to purchase from the what? External party. Under the current transfer pricing system, under the what? Current transfer pricing system. What is the current transfer pricing system? At which price that we are going to transfer? At which price that we are going to transfer? Come on. Sorry? At which price that we are going to transfer? At a price of what? $13. $13. Right? So how many units that are we going to transfer? Are we going to transfer entire 180,000 or only 150,000? Only 150,000. Am I correct? So the remaining that we will sell it to the what? External market. External market. Correct? Under the current transfer pricing system, prepare a profit statement showing the profit for each of the divisions and for the portable garage company as a whole. Your sales and the cost figures should be split to the external and internal divisional transfer were appropriate. Marks 9. Shall we start? Sanjana, only you have got the answers as of now. I don't know about Priyanka, Malavika, and from this physical. She told me for B, 7,590, top 3 zeros. A, 100. As a company, 7,690. Let's double check. What about your answer? Okay, we'll check. We'll check. Right. What about you also? Right, okay. First, we can put division A or division B, anything, no problem. Division A, right? This is division B, right? This is company, all. Sales. One is external. Another one is what? Internal. If you look at A is having about only what? Selling price for adapters, we have both external sales as well as what? Internal sales. So external sales A, 150,000. What is the selling price? 15. 150,000. 15. We'll put 3 zeros on the top. It's easy to work. How much? No, I'm sorry. 200,000. No, external sales. External sales is what? 200,000 times 15. Correct? 3,000. 3,000. If you look at company B, external sales is what? 150,000. Am I correct? 150,000 at a price of how much? 180. Then how much? 27. Internal sales for B is nothing. Am I correct? Therefore, total sale for the company is what? 30,000. 30,000. You all agree with me? But internal sales for A, you have how many units you are transferring internally? 150,000. 150,000 at a price of what? 13. Then how much? 1,950. Therefore, the total sales is 4,950 here. Here, same 27,000. Here, 30,000. Correct? And now let's put the heading as what? Cost. First, let's put the transfer cost. Transfer cost. Transfer cost. A is nothing. For B, how much? 1,950. Right? Next one is the material cost. For A, they are making how many units? 350,000 units at the rate of how much? Otherwise, I'll have to go back to the previous slides. Not this one, no. I don't know what happened to my previous working. Right, 350,000. What is the material cost for B? That's sorry, A. A $3. Am I correct? Then how much? 1,050. Am I correct? 1,050. Next one is a labor cost. Labor cost 350,000. How much the labor cost for A? A labor cost is what? $4. Then 4 times 350,000. 1,400. In addition to that, we are having a what? External variable selling expenses. Am I correct? External variable selling expenses. That is, $1 for per unit only for the external sales. Therefore, 1 times 200,000. Am I correct? Therefore, that would be 200. Am I correct? Now we can get the what? Contributions. What is the contributions? $2,300 minus what? Fixed cost. How much the fixed cost? 2,000, 2 million. 2.2 million. Therefore, the profit would be 100,000. I think Sanjana's answer is correct. Very good. Sanjana's answer is correct. 100. Where you went wrong? Okay. Now let's quickly calculate for the company. Sorry, division B. Division B. Division B. 80,000. Sorry. How many units? Division B. Division B. 150,000. Am I correct? 150,000 material cost. Other material cost is how much? 45. Am I correct? 150,000 times 45 is how much? 6,000. Labor cost is 150,000 times 5,000. 5,250. There's no variable selling expenses. Now we can get the contribution. What is the contribution? 13,050. 50. Then the fixed cost 5,460. Then what's the profit? 590. Same answer. Yes, you're correct, Sanjana. Very good. Now let's quickly calculate the company as whole. Transfer cost is nothing. Material cost would be 6,000, 7,800. Here, labor cost would be 5,000, 6,000, 650. Variable selling expenses 200. Now we can get the total contribution, company's contribution. How much? Come on. Sorry? 690. Answer is correct, Sanjana. Quickly take down those who made mistake. $13,000. The company's contribution. Then the final answer is correct. $30,000. No, oh, just double check. 30,000 minus 7,800 minus 6,650 minus 200. 13,000. Sorry? 15? 35? Correct, no? You can take down quickly those who made mistake. That is how many marks? 9 marks. Very easiest questions, no? Very easiest question. It is easier than the question that we did for previously. And there's one more question to be given as a homework. That's of course a bit harder. For the timing, we'll skip. I'll share that question later because you know why. One more areas to be covered with regard to the, yeah, we have covered no residual income and all. So we can do that questions as well. Not in the class, but you have to make it as a homework, right? Right, okay. What is the second part of the requirement? Assuming that the new group purchasing policy will ensure the optimizations of group profit. Calculate and discuss the number of adapters which division B should buy from division A and the number of adapters which division A should sell to the external customer. There are 3 marks available for calculation, 3 marks for what? Discussions. Can you read the requirement again and try to understand what they are asking? Assuming that the new group purchasing policy. What is the new group purchasing policy? Look at the last para of the question. After discussion with the both divisional manager and to ensure that the managers are not motivated, head office now agreed to change the purchasing policy to allow division B to buy externally, provided that it optimizes the profit of the group as a whole. That is our current policy. Am I correct? Assuming that the new group purchasing policy, that is the new group purchasing policy, we are going to advise to the division B to purchase from the external supply the remaining units, right? Because the complete order may be what? Given. Only 150,000 can be purchased from the what? Internal sources, internal division. Calculate and discuss the number of adapters which the division B should buy from division A. So how many adapters then? You know, B's total market demand is what? B's total market demand. Market demand 180,000. So from this total market demand 180,000, they can buy from A 150,000. Agree with me? Agree with me? And they can get from external supplier 30,000 adapters. Why we are not going to force A to supply entire 180,000 to B? We need to prove it through some calculation. One, I can tell you, when they are transferring to this 150,000 to what? B, they're transferring at a price of what? $13. Am I correct? But when these people are selling to the A for the external market, they are selling at a price of what? $15. Through the external sales, right? The selling price is $15, right? The total variable cost, direct material, direct labor, and what variable selling expenses is there? Because only for the what? External sales. What is the material cost? Material cost for A, $3. $3. Labor cost, $4. Variable selling expenses, 1. Therefore, altogether, through the external sales, A is making the contribution of how much? 7. Agree with me? Every one what? Adapters through the external sales, they are making the what? Contribution of what? 7. When they are giving to the internal party, division A, they are giving at a price of what? $13. So 13, but there is no variable selling expenses. Internally, they are making 13 minus 3 minus 4, that would give you $6. Agree with me? Contribution is how much? $6. Because whenever the division A maximizing their contribution, it will enhance the what? Company's contribution as well. Do you agree with me? Do you agree with me? Therefore, the same external supplier for B, when they are giving the adapters at a price of 13, purchase cost is how much? Cost of how much? 13 for the company. It means the division anyway comes under company. Company's purchase price is what? 13. So same adapters, as far as the company is concerned, what is the marginal cost? Total variable cost. Only 7. Agree with me? Therefore, as far as B's perspective, they are going to pay $13, right? The company's perspective to make this adapter, the cost is what? 7. As a company's perspective, they are going to get the extra benefit, extra contribution when they are buying from outside, which is what? $6 only. Do you understand what I said? Now let's talk about the company's perspective. Company, they can advise A to sell it for external party. Why? They can make a contribution of how much? 7. Meantime, if B is going to get the product from what? External supplier, right? Their extra cost would be only $6. Agree with me? Therefore, as far as the company is concerned, company is going to gain what? $1 extra contribution by doing a what? External sales. You got my point? Is that understandable? Therefore, what is the conclusion? We can ask division A to what? Sell more externally, right? Because B, you don't need to focus for the B, because if the B is going to get from external party, as far as the company is concerned, it's a profit. It's a profit. $1 is what? Profit. Because they are going to get what at a price of what? $13. That comes through the what? That variable selling expenses. Therefore, the conclusion, we can ask A to sell what more externally, and B, we can ask them to buy from what? External supply. That will enhance the what? Company's profit by $1 for every one adapter. Do you all agree with me? Do you all agree with me? Shall mark this idea with these calculations quickly? Take down. If division B can buy adapter from outside the group, if division B can buy adapter from outside the group, at $13 per unit, at $13 per unit, $13 per unit, comma, then the optimum position of division A then the optimum position of division A to sell many adapters as possible to external customer at a price of $15 each. Right? Next line. This would mean the contribution is generated through external sales for division A the contribution is generated through external sales for division A is $7. $7. Please show these calculations within the bracket if you want. Which means that for every external sales it loses, the company's contribution will reduce by $7. Company's contribution will lose by $7 for every one adapter. At the same time, as far as the company is concerned, if the division B is buying adapter from external supplier, that would cost only $6. $6. Why do we say the $6? That is the what? Incremental cost. Making the adapter as far as the company is concerned is only $6. Same thing that they can get it from outside for $13. They are going to pay only what? $6 and what? Extra. Am I correct? So within the bracket you can say 13 minus 7. Right? Full stop and continue. So it makes sense. It makes sense. For division A to satisfy the external sales first, and then external sales first before selling to internal. Let's quickly answer for part C. Look at the part C, what they say. Calculate and discuss what the minimum transfer price per unit would be for any additional adapter supply above the current level by division A to division B, so that division B can meet its maximum annual demand for the new portable batteries. There are 2 marks available for calculation, 3 marks available for discussion. Do you understand the question first? Can you go through the questions again? Calculate and discuss what the maximum transfer price per unit would be for any additional adapters supply above the current level by the division A to division B. Excuse me. Now you know divisions A's maximum capacity is how many units? 350,000 units. Correct? From these 350,000 for external market, they are supplying 200,000. Correct? Internal, they are supplying what? 150,000. Now internal market demand is what? 180,000, which means they are asking another 30,000. If they are going to give another 30,000 from these 200,000, the external market sales will reduce by 30,000. They can sell only 170,000 for external market. Do you agree with me? They can sell only 170,000. If they are going to sell 170,000, the remaining 180,000 they can give it to the what? Division B. They can give it to the division B. When they are giving to division B for first 150,000, but they have already agreed at a price of what? 30. Now the requirement, the remaining, this 30,000. Here 150. This is what? 30,000. What is the transfer price that you can charge? What is the transfer price that you can charge for division B to supply these 30,000 adapters? Think and tell me. I hope you understood the questions. Currently, right, our total capacity is 350,000. Our total capacity is what? 350,000. Out of 350,000, we are supplying 150,000 to what? Internal market for division B. But at the same time, their market demand is what? 180,000. Now these people are requesting, no, give us what? 30,000 extra. Apart from 150,000, we need what? Another 30,000 extra. If A is willing to give that 30,000 as an extra, what is the price transfer price that they can charge. That is the requirement. You tell me what is the price that they can charge. For this 150,000, you are giving at a price of $13. That's not a problem because that they have a spare capacity. No, they can give for the agreed price. But these 30,000, because they are reducing, but now they are external sale. For that 30,000, they are giving to what? Intern. So what is the price that they can charge? One is marginal cost. Do you agree with me? What is the marginal cost? 4 plus 3. Material cost plus what? Labor cost, which is what? 7. And plus what? Opportunity cost. What is the opportunity cost? Each and every unit here, they're making the contribution of how much? $7. So when they are transferring the 30,000 to what B, they're losing the contribution. That is always relevant. Am I correct? Therefore, making the product is what? $7 plus what? Opportunity cost, which is what? Lost of contribution. Sorry, lost contribution. Lost contribution. 7 altogether. They can charge what? $14 as a what? Transfer price. Do you all agree with me? That is reasonable price, no? Because one side, what is the making of that adapters? Another part is by transferring from one section to another section, how much we are losing. That is how much we are losing for every one adapter 7. The total amount that we can charge for our division B, if you are giving me $14, I can give it to the 30,000 adapters. Do you agree with me? Very simple. Very simple calculation. External selling price is how much? 15. 15 minus variable selling, external variable selling price is how much? 1. 14. That way also you can give the answer. Oh, but here bit of a detailed calculation I have shown. What is the making marginal cost plus what? Loss of contribution altogether 14. Or another easiest way of but deriving the answer. From your total external selling price is how much? 15. From that you are getting for the external sales, the variable selling expense is $1. If you remove, because when you are transferring to internal, you are not going to pay that what? $1. Therefore, you can tell them, give me $14. I can give you the 30,000. Then ultimately, fair deal, amicable. Both division will be but happy. So show this calculation and write it on your own English word. Right? Shall we have a break? Let's take a break. Right after the break, we will continue with the new chapter, which is what? Budget. Right. Let's get started with the new chapter, which is what budget, right? Excuse me. If you look at budget, uh, generally there are three types of a budget. Numbers perspective. One we call it as functional budget, which is not a part of our discussions since it was discussed where in your knowledge level. It's not necessary. That will not be tested even. Second one is cash budget. Cash budget also you have discussed where in the knowledge level. That is not part of our discussions once again. Third part is numbers based one is what? Flex budget. There's a chance of getting the question from the what? Flex budget, or some people call it as what? Flexible budget. Right? To do this part, you should remember the basic references, what we all did under high-low method and all. So we'll discuss this part in detail, no worries. Apart from these numbers perspective, there are some budgeting approaches. There are some what? Budgeting approaches. One approach is what? Incremental approach. Another one is zero-based approach. Another one is rolling approach. Sorry. Another one is activity-based budgeting approach. Apart from that, you have two ways of preparing the budget. Some people who, for that also they are calling as what? Top-down approach. Another one is bottom-up approach. Bottom-up approach. Then we'll have to discuss beyond budgeting. Beyond budgeting. These are the whole part of what? Budgeting areas. So based on the past papers, what I understood, the examiner is most interested on what? Zero-based budget. And sometimes they may ask the question, what is exactly meant by what? Beyond budgeting. If they are really test you with regard to the flex budget, you'll be getting a 5 to 10 marks questions where in the exam under flexible budget. There's a one question that needs to be explained for the rolling budget for numbers based on past papers, as just for a reference, but less probability of getting the numbers based rolling budget just for understanding purposes and the knowledge building perspective. Yes, but I will update you with regard to the marking attendance. How do you all mark your attendance for the timing? Manual, no? But I will update you, the people who are joining online. For them, what is the alternative option for the people who are joining online? They will mark themselves. Okay. Okay, I will convey the message, Srivatsa, and let you confirm what their process with regard to the what your attendance, right? A rolling budget, as for a knowledge building perspective, plus to understand exactly what is meant by rolling budget, we will do one numbers based example. Numbers based example. Are you clear? This is the whole part what we are going to discuss with regard to the what budgets. Now let's get started. The meaning of budget. What is meant by budget? What is meant by budget? Very good. Who is your finance minister? The country of what? India? Nirmala Sitaram. Right? She is the lady who will present at the parliament with regard to the what? Government future expenditure and government future income. Am I correct? So I'm going to change only two words. Instead of what finance minister Nirmala Sitaraman, management account. Instead of the government, what company? Right? It's a quantitative statement. Clearly it says what? Quantitative statement which planned your revenues, expenses, assets, liabilities at the beginning of the period. That will be compared at the end of the period with the what? Actual. If there are any differences, which is known as what? Variances. Same thing what we discussed under standard costing. Variances. Once again, there are two types of variances which would be resulted. One is what? Adverse. Another one is what? Favorable. That we will be discussing once again under flex budget as well. The way of calculating what variances. Based on the variances, management will take the control action. That is the whole part of the definition with regard to the what? Budget. It's a quantitative statement which planned your revenues and expenses, assets, liabilities, everything what at the beginning of the period. At the end of the period, you will compare with what? Actual. If there are any differences, we call it as what? Variances. Now, you remember we talked about variances. You should remember there are two types of control actions. One is feedback control. Another one is feed forward control. What is exactly meant by feedback control? Based on your variances. The best example is what? Flex budget and the standard costing. Based on your variances, your end results. You will be taking the necessary action for future. That we call it as what? Reactive actions. Feedback. What is meant by feed forward? Proactive actions. What is meant by proactive action? Before the event occurring, the necessary arrangement which would be done in advance. That is what is known as what? Feed forward control technique. The best example about the feed forward control technique is cash budget. Why? Through the cash budget, what we are going to do, we are going to identify what will be our future cash inflows and what will be our cash outflows. We will be getting our cash position in advance. Let's say every month you are paid as a salary of 100,000. Then what you would do, right? You know, next month my salary would be 100,000. From the 100,000, what are my expenses? So I'll have to pay for that. There's a commitment, right? For my living expenses. Likewise, you will point out all your expenses and you would see the what? Your position. Whether I have what? Excess cash or shortfall. If it is a shortfall, what I'm going to do with a shortfall? That action that you're going to talk about or that you're going to take what? In advance. That's why we call it as what? Feed forward control technique. Forecast your what? Future in advance and you will compare with that what? Budget. You will be finding the what? Differences. Based on the differences, proactive will be taken what? In advance. The best example is what? Cash budget. Cash budget. That is all about what? Feedback and feed forward. Right. Coming back to my point. Budget. I can complete the definition with regard to the budget in 3 words. I can complete my definition what? In 3 words. How? Budget is a quantified plan of actions. quantified. What is meant by quantified? Numbers. Plan mean what? Estimations. It can be what? Revenue or what? Income. Plan. Actions is what? Based on the variances, you will be taking the what? Control action. That is all about what? The definitions of what? Budgets. Are you clear? Are you clear? Right. Now, purposes of preparing the budgets. Or I can put it what are the functions of the budget? Or I can say what are the advantages of budget? What are the purpose of preparing the budget? Why do we prepare budget? You tell me. Before you come to the morning session, yesterday night you prepare a budget. Based on your budget, you borrowed money from what your parents. Do you agree with me? Those who are depending on parents for the time. Those who are relying on your own feet, it's basically what your income. Am I correct? So you prepare a budget last night before you come to the class, right? Do you all agree with me? You prepare a budget yourself yesterday night. Why? What's the purpose of prepare? Why are you preparing a budget? What's the purpose of? We discussed this part by the standard costing as well. What's the purpose of preparing the budget? Very good. First, for proper planning, we need to plan ourselves. Without having a plan, we can't do any other activities where in our day-to-day operation, even for the company. If you do not plan last night what you are going to do for the tomorrow's activities, how much is needed, you can't do any of your work. I can tell you number of examples. Last night, you planned yourself to come for the classes by what? Public transport, which would cost only 5 rupees. From let's say X to Y, it would cost only 5 rupees. That is the amount that you planned last night. You got late, right? You got up late. Then you were planning to come for the class. You came out from home. Then you were planning to come through what? Tuk-tuk. Auto. Then what will happen to your expenses? Will it be 5 rupees? 5 rupees will become how much? 50. Am I correct? So if you planned yourself last night to spend 5 rupees, you try your level best to spend only how much? 5 rupees. Then you will try to get up early in the morning. Am I correct? You will try to get into the bus early in the morning. You will try to come to the class on time. Everything that you would do what? Based on what? Your plan. Therefore, why are you preparing the budget? First one is what? Planning. What is the second reason? Second purpose. One is correct, planning. There are a number of reasons that we are preparing the budget. Very good. Decision making. We need to take a right decision at the right time. You planned yourself last night to come by public transport. You came out from your home. Then you will have to take a decision whether to go by what? Public transport. Let's say the public transport is getting late. Now you have a two options. One option is you can come by auto yourself only, or you can come by the sharing auto. That will be what? Bit cheap. Am I correct? Then you have to take a right decision at the right time based on what you planned. So the second option what you have is what? Sharing auto, or you can come by what? Local train. Am I correct? That is what is known as decision making. What else? What are any other reasons? Planning, decision making. What else? Yes, very good. Cost control. That is what I have got the word controlling. You have to control yourself. What is exactly meant by controlling? I have clearly explained to you with regard to the what variance analysis. You'll have to control. So let's say you planned yourself for the public transport 5 rupees. You came out, you got into the bus. The bus says from today onwards we have increased what your ticket fare to what 7 rupees. It happened, no? Then when you are planning tomorrow, instead of asking 5 rupees from your parents for what bus, you will ask what 7 rupees. That is what is known as control. Not only for what this budgeting technique, Most of the part of what management accounting technique which are being deployed were in the syllabus. Mainly for planning, second one is decision making, third one is what? Control. Apart from that, to coordinations. We need to coordinate all our activities, right? We need to communicate all our ideas. We need to motivate the what employees based on the what reward system, because you will give a plan to what your employees. You will tell them to you'll have to do a sales of somehow 1 million units. If they achieve the what target, they'll be given the what bonus. They will be rewarded. Am I correct? Therefore, to why are you preparing the budget? To motivate what your employees, right? To for the what performance evaluations. These are the additional reason for what preparing a budgets. Are you clear? Are you clear? Next one is budget period. What do you think about the budget period? What do you mean by budget period? How long the budget period? That's the place where we are making mistake. We think the budget is always for a year. But in very first day, I have explained the management accounting is not prepared annual basis. Whenever it's needed, you because frequent basis. Whenever it's needed, you can prepare a what? Management accounting. Therefore, what is exactly meant by budget period? The period that you are going to prepare your budget is budget period. It depends on what company's requirement. Company can prepare a budget for what weekly basis, no problem. Let them prepare. We don't place a finger on that. If the company has a plan to prepare every month, let them prepare for one. Every quarter, let them prepare. It's up to their requirement. That is what is known as budget period. There is no specific requirement to be prepared as what annual basis. Am I correct? Next one is a budget committee. What is meant by budget committee? What is meant by budget committee? Any ideas? Sorry? Okay, very good. Why do you form a committee to prepare a budget? What's the reason? That's true. I do agree with you, but I'm asking from you, why? What's the purpose of forming a committee? Can't we? Because you know why? If you look at the multinational company, there are a number of employees. There are a number of division department. You can't include all the employees when the budget preparation process, right? What you would do is you will take a representative from what each what department. Then you will form a cross-functional team. This team will function until they set the what budgets. That is what is known as budget committee. If you do not form a budget committee, it will be a conflict between the department. I can tell you this way. Let's say production department says we are going to produce 1 million units. Sales department say no, we can't sell 1 million. This is an off-peak time period. Therefore, we can sell only what 800,000. So if they form a committee before they prepare the budget, different people will come up with a different opinion. They can form a what real budget. You got my point. That's the reason they are forming a budget committee, taking a representative from what different department. So you'd have learned this part, the function of the budget committee, budget manual, right? There's one more part we call principle. It's not part of our discussion, but much more important when I'm starting the analytical tools of the forecasting. Principal budget factor or budget limiting factor. What is meant by principal budget factor or budget limiting factor? Any idea? Sorry? What is that? Then what is that factor? Principal budget factor mean budget limiting factor. Another name is what? Budget limiting factor. The point at which the budgeting process should begin. where you are starting budget. Where you are starting the budget. That is what is known as principal budget factor. Generally, it is identified as what? Sales units of the firm. Generally, it is identified as what? Sales units of the firm. As long as if you are able to get the sales units of the firm, you would be able to prepare all the rest of the budget in the company. That's the reason we do call the principal budget factor. If you do not have a principal budget factor, no any other budgets. My questions, listen very carefully. It's not part of our discussions with regard to the functional budget. Functional budget means the budgets are, prepared for the day-to-day activities. So by identifying the sales budget of the firm, which is the principal budget factor, you would be able to identify, or you will be able to prepare all the other budgets. That can be done. That's not a problem. There's no questions on that, right? My questions to you, how to decide the future sales. Example, I'll go back to this Aripro, right? Aripro, let's say they are going to prepare a budget for the next semester, which will be what? June, say for example, June. What will be the number? Because their perspective, the sales would be the number of students. Agree with me? What would be the number of students? You tell me how to identify that. Based on the? Yes, that's okay. That's okay. One factor. My question, I'm asking from you. Let's say this time they have got 50 students. But let's talk about only ACCA. They got about what? 50 students. Actual number is what? 50 students. Now they are doing a prediction for what next semester. Will it be 50 or will it be more than 50 or less than 50? Why? Because as long as if you are able to find out what would be your sales budget, all the other budget can be prepared. That is not part of our discussions anyway in our syllabus, but that can be prepared. My question, how to identify that sales unit? Then I said this time is 50. Then you are telling me, I asked the 3 questions. Will it be the same as 50? Will it be more than 50 or less than 50? Then you told me more than 50. On which ground that you are telling me that is for more than 50? Any other answers? Because she was saying that, it's based on the past 50. As a company, we'll have to go forward. Therefore, we'll have to make it as what? More than 50. But whenever you set up... Sorry? Yeah. I can agree with you. All your answers are correct. Forget about Aripro. I'll ask another question from you. You tell me the truth. Let's say you are running an ice cream company. It's most of the people who are one of the favorite item, ice cream, right? Let's say South Asia, we have only 2 seasons. One is what? Winter. Another one is what? Summer. First 6 months, let's say summer. This season is what? Summer, right? Let's say we have achieved a sales of what? 1 million units. 1 million units. Let's say the company is having a plan to prepare a budget for next 6 months. Will it be more than 1 million or less than 1 million? You are preparing the budget for winter. Will it be more than that or less than that? Now, do you agree with me my statement? You said as a company, last time we got about 50 students. Therefore, we'll have to go forward. We'll have to make it always what? More than 50. It's not reasonable argument. Am I correct? So I'll put it very simple English language. We need to learn one more topic to be done. That is what is known as, under analytical tools, we'll be discussing the forecasting. How to identify what that sales unit, which is done through the what? Analytical tool, which is what? Forecasting. The one factor that you said, what? Season. We'll have to consider the what? Season. Another factor, what he suggested, as a what? We'll have to check the what number of inquiries. You got my point. That is all about what? Setting the what? Principal budget factor. Setting the principal budget factor. Anyway, once again, that is also not part of our discussion, not part of our discussions. Clear? Now we are moving to approaches of budgeting, alternative approaches of budgeting. So flex budget, we will do it separately. We'll do it separately. Now, first one is incremental budget. Any idea what is meant by incremental? Incremental budget. Incremental. From the name itself, it's giving you the definition. Incremental budgets. Whenever you prepare a budget for future, what you would do is from the current period actual or current period budget, from that you will do some adjustment to do what? Future budget. Let's say current year sales is 100 million. Current year sales is what? 100 million. Or it can be a budget or actual. Whenever you prepare a budget for the future period, current period would be considered as a what? Base. That would be considered as a what? Base. From that, the amount what would be what? Increment. Let's say there will be 5% inflation. Then what? That 100 times 5%, then our future sales would be what? 105. Or you have predicted the sales is going to increase by 10%, then 110 million with what? Inflation, or without inflation, everything should have been adjusted. That is what is known as incremental, more traditional approach. This is the way most of the company who prepare the budget. Very easiest way of preparing the budget. Because without having anything, if I ask from you, let's say, are you broke? You don't know anything. What is exactly happening currently, or what is going to happen, or what was, happened in the future, nothing is known. I'm asking from you, get me the budgeted figure for what? Next semester. Very difficult, no? Very difficult, no? You'll have to do number of research to what? Prepare your budget. When you are completing your research, that period is over. So incremental budget says what? From the current period results, do some what? Adjustment. It can be what in terms of what? Inflation or some other seasonal factor, and prepare a future budget. That is what is known as incremental budget. Are you clear? Incremental budget. So we are preparing the future budget from the current period as a what? Base. There are a number of advantages. What are the advantages? What are the advantages? It's very simple. Yes, of course, it's very simple and but very cheap, right? Very practical, right? And what suitable for only for a stable environment, not for the dynamic environment. It is suitable only for a what? Stable environment. Do you agree with me? Then only, because if the environment or if the condition is what? Stable, with some changes you can do our predictions. Am I correct? But that is not much suited for dynamic environment. Dynamic environment, the changes are taking place but rapidly in the market. But very rarely that you would see the what? Stable what? Environment conditions. Am I correct? So what are the drawbacks of this? Not suitable for what? Dynamic environment. What else? Very important drawback. Past inefficiencies would what? Continue. Do you agree with me? Why? You are going to prepare your future budget based on the past as a what? Base. If there were some inefficiencies in the past period, for the future also you are taking that as a base, that would be what? Keep on what? Continuing. Do you all agree with me? No continuous what? Improvement. No continuous what? Improvement. Also, activities are what? Not justified. Because you don't specifically check one by one. Am I correct? Yes. From the past, each and every element will be what? Added. Each and every element will be what? Added based on the what? Changes percentages. Am I correct? Each and every part you want what? Justify. Am I clear to you? These are the number of drawbacks with regard to the what? Traditional, or another name is what? Incremental budget. Clear? So the next part, which is much more important, number of time which has been tested behind the exam. Will I be very careful? Right? You may be, there's a chance of getting what 10 marks question or 10 marks section C as a part of what 20 marks questions. That is what? Zero based budget. What is meant by zero based budget? Zero based budget. Sorry? Correct, correct. Very good, very good. The budget would be start from the scratch. Would be started from what? Scratch. The previous period shall not be considered as a what? Base. Every time that you would pretend this is the first time that you are preparing a budget. Am I correct? This is the first time that you are preparing a budget. But it's very complicated, you know. Am I correct? So, but there are number of things to be considered when it comes to what? Zero based budget. Once again, what is meant by zero based budget? The budget to start from what? Not zero, from the scratch. In other words, completely opposite of what? Incremental. We don't go and check what exactly happened in the past. Every time that you pretend, this is the first time that you are preparing the budgets, right? There are a number of steps needs to be followed, right? Take down. Some notes are given where in my study material, refer the definition. So some additional notes that I'm going to give you with regard to the zero based budget. Each expenses must be analyzed each expenses must be analyzed and approved based on necessity. Also, funds are allocated based on priority. Excuse me, it's not like our incremental budget. This, of course, each and every part you will go in detail, right? Say for an example, cost. Why this cost? Under this cost, what are the benefits that are we going to get by spending for this? That's the reason each cost element should have been what? Specifically what? Justified. The reasons, evidence, right? It's a long process, right? Small heading, steps in zero-based budgeting. Within the bracket, just mark decision package approach. Decision package approach. decision package approach, right? There are few steps to be followed. Listen very carefully. This would be tested sometime when the exam, because I have seen the number of past papers question with regard to the zero-based budget. Also, zero-based budget which would be given, uh, with the case. There will be a small case which would be provided for that company only. They may ask what are the advantages, how they are going to implement the zero-based budget, right? And by implementing the zero-based budget, what are the problems, disadvantages for this company? Likewise, it may be tested when the exam, right? Steps in zero-based budgeting, that is we call it as decision package approach. First, identify the objective. Identify the objective. So what we have to do is, we'll have to first identify the what is the company's objective of what preparing this budget. Let's say minimizing the cost or maximizing the profit, right? These are the main objective. Main objective is what? We need to what? Minimize the cost, because by preparing the zero budget only, you would be able to identify what are the unnecessary expenses that the company is what incurring. That can be what? Eliminated. That can be what? Eliminated. Because if you look at the traditional approach, nothing, last, continuing. But here each and every element, right, will be what? Properly what? Analyzed. Am I clear to you? Example, you can say manufacturing company wants to reduce the cost and improve efficiency. Identify the objective. Reducing the cost. Manufacturing company wants to reduce the cost or what? Improve efficiency. Anything, objective can be anything, right? Second step, define the decision unit. Define the decision unit. What is meant by define the decision unit? You will have to split, or you will have to what? Break down the company into a smaller what? Department. You have to split the company into what? Smaller what? Division or department, right? So each department you'll have to check what are the costs that they are going to incur, whether that is what? Needed for the time being. You got my point, right? That is the second part of the step. Take down, define decision unit. Example, break down the organizations. Break down the organization into smaller units or departments or projects. Break down the organizations into smaller units. Department or projects. Example, I can say you can identify what are the key departments. What are the key departments? Identifying the key department. Example, identifying the key departments. Identifying the key departments. Excuse me, there are some departments, it's not key, right? So when you are preparing the budget, some of the department, say for an example, raw material purchasing department. So to do a business, you should have what? Raw material. For that part, you'll have to clearly what? Specify the what? Budget. You'll have to check from whom are we going to get the material. What about the material? What quality? What are the prices that are we going to get from the supplier? What are the credit terms? Each and every part specifically what? Identify, right? Whether marketing is important, how to sell the product, right? On which platform that are we going to do the marketing? Are we going to go for a marketing with the mass media or social media, right? That's why I mentioned as a what? Key department to be what? Prioritized, right? Third step, Analyze and justify expenses. Analyze and justify expenses. Mark that each decision unit each decision unit must justify its budget from scratch. From scratch. Excuse me. If you look at, for instance, I can say, let's say, if you look at the marketing department says we'll have to go for advertisement. So then you will have to analyze by doing this advertisement how that will boost your sales. That should be properly but analyzed. Based on that only you will allocate the fund. You got my point. Each and every element you will have to properly analyzed. By doing that, what would be our results? Right? Take down the example. Marketing department justify how advertising expenses is supporting to create sales. How advertisement is supporting to create what? Sales. Step number 4, rank expenses based on necessity. Rank expenses based on what? Necessity. Based on necessity. Excuse me. Already we have categorized into number of what? Decision units, right? Number of decision unit will require a number of what? Expenses. Now what we have to do is, based on the zero-based budget, what is teaching us, you rank that based on the priority. How to run your business? To run your business, you will have to produce your product. To produce your product, you need to what? Buy the raw material from the supplier. That is what first. And what? To produce a product, you will have to maintain what? Your equipment. That also should have been given the what? Priority. I'm asking from you, is it compulsory to train the people now? Is it important to produce a product? Training. What I'm asking, when you are prioritizing what your each activity, do you want to give the focus on what? Producing the product and delivering the product, or giving somewhat extra support to the what? Employees? What is more important, priority wise? Only what? To get the what? Final output to what? To go for a what? Sales. So you'll be learning later. You will be deciding what are value adding activities, what are non-value adding activities. Later on, what your APM, right? So here what we are going to do is, we are going to identify our activities based on the what? Important. We will rank it. Right? Machine maintenance is what? Much more important. Raw material purchase is what? Much more important. Right? Some of the activities are not important for the timing. That will be given the what? Least priority. That is what we are saying, what? Rank the expenses based on the what? Necessity. Rank the expenses based on the what? Necessity, which means we will try to identify cost benefit analysis. By doing that, what is our cost? From that, how much that we are getting the benefit. That's we call it as what? Cost benefit analysis, right? You can mark example cost benefit analysis. Cost benefit analysis. You can say machine maintenance is what? Urgent, important. Should have been given the priority at what? First. Machine maintenance. Raw material purchase is what? Urgent. Raw material purchase is what? Urgent. Then you can say what? Training, not urgent. Not urgent. Training is what? Not urgent. Next step, allocate the funds based on the rank. Allocate the funds based on the what? Rank. Excuse me. I would say most of the government sector, they are using the zero-based budget, because each and every time they are starting from the what? Scratch. They can't go and check what they have spent for the previous projects. Am I correct? But it does not mean 100% is successful for what? Government sector. Government sector, right? There are a number of advantages. What are the advantages of zero-based budgeting? Past inefficiencies what? Will not but continue. Am I correct? It's more suited for the what? Dynamic environment. It's more suited for what? Dynamic environment. Because each and every time you are coming up with a what? Zero. Am I correct? What else? It will motivate the what? Employees. Because most of the people will get involved with the what? Budget part, because we are splitting into the different divisions. We are asking from them each and every part of the but expenses, right? Employees will be motivated. And very important that I have clearly explained to you, we will be finding what are value adding activities and non-value adding activities. Through that, any part which is not giving the value for the what product or the company, that will be what? Eliminated. That will be what? Eliminated. That is what I have highlighted. What I value, anything which is, because that through the zero-based budget only, we are prioritizing our each activity based on the what? Necessity. There are something which is not relevant. Best example I said what? Training. It's not relevant for the time being. Therefore, we can eliminate that one. We don't need to spend money for what? Training for the time. Am I correct? So these are the advantages for the what? Zero-based budget. What are the drawbacks? Very good, very complex, time consuming. We need an expert panel to prepare what? Zero-based budget. Am I correct? Sometimes it's very difficult to react for unforeseen events. If there's a flood, can you go and start from this zero? Right? Unforeseen events, very difficult to do a what do you call to implement the what? Zero-based budget. And we will prioritize the project, no? We will rank the project, no? Based on that only we are going to allocate the fund, no? But the ranking sometimes will be what? Subjective, not objective. Am I correct? That anything may happen anytime. Therefore, it's what? Very subjective ranking. These are the what? Drawbacks of what? Zero-based budget. Please try to remember the whole part of what? Zero-based budget. There is a chance of what getting the questions were in the exam based on the past paper. Anywhere it would be tested. So I have clearly and detailed way I have explained to you what zero-based budget. We'll start from the what? Scratch. Each cost element specifically but justified. By spending this but these activities, what are the benefit and what are the what? Cost. Am I correct? And based on the what necessity basis, we are ranking the what? Our projects, our activities, right? Now the next one is rolling budget. We'll do one numbers based question and a rolling budget, past paper question. What is exactly meant by rolling budget? Try to understand the whole concept. When the earliest period got expired, new accounting period will be added. That is what is known as rolling budget concept. How? Let's say the company has a plan to prepare a budget for every 3 months. January, February, March, April, May, June, July, August. It goes on. If you are going to apply the rolling budget concept, first you will prepare a budget for January, February, March. Agree with me? When the earliest period is expired, let's say January is over, now the new accounting period will be what? Added. Now the next 3 months would be February, March, April. When the February is over, new accounting period will be March, April, May. So March is over, April, May, June. Look at the shape. That is what is known as rolling budget. When the earliest period is expired, new accounting period will be added. That is what is known as rolling budget. Now I'm going to explain to you how this rolling budget practically is prepared. Listen very carefully. Let's say I'm going to take one example with regard to the sales. January, February, March. Right? Sales. This is budgeted sales. Right? Let's say 1,000. Right? Here 1,050. Right? March. Right? 1,050. 5%. 1,102.5. Right? This is the last 3 months budgeted sales. Right? April, April, actual sales, 1,150. 1,150. Listen very carefully. Very easy for you to understand. if you are going to apply the rolling budget concept, right? Let's say the requirement is calculate the budgeted sales for May and June. What is the budgeted sales for what? May and June. To calculate the budgeted sales for May and June from 1000, because 1150 is what actual, 1150 is what actual. From the 1150, based on what your rolling budget concept, you have to check how many percent each month your sales has been what increase or what decrease. So if you look at January to February, how many percent? 5%. Do you agree with me? How 50 divided by 1000 times 100, 5%. Here 1102.5 minus 1050 divided by 1050, how many percentage? Here also what? 5%. You don't know how to calculate the differences. 1050 minus 1000, which is what? 50. 50 divided by 1000, that would give you 5%. Or 1102.5 minus what? 1050 divided by what? 1050. Then you can identify what is the percentage changes. But most probably, when it comes to the rolling budget, we will go with the same percent. So when you are preparing the budget for May, from 1150, we will add how many percent? 5%. How much now? How much? $20? Then 1150 plus 57.5, 1207.5. Am I correct? 1150. The 5% is what? 57.5. No? Therefore, 1207.5. Right? From this, another 5% will be added for what? June. This is the summary of what? Rolling budget. Are you clear what I'm saying? What I have explained? So first of all, what you have to do is, what is meant by what? Rolling budget. When the earliest period is expired, new accounting period will be added. That is what is known as rolling budget. If the company want to go for a rolling budget concept, what they have to do is they'll have to check the past information. The sales has been increased by how many percentage? 5%. The future also we will be assuming that is going to increase how many percentage? 5%. Therefore, that May sales which would be decided not from the what? Budget, from the what? Actual, we will be adjusting 5% and we will be calculating. This is what is known as rolling budget. Rolling budget. Are you clear? Rolling budget. Now we are moving to, there are two ways the budget can be prepared. Sorry, before that I forgot to tell you, there's one more budget. Activity-based budgeting. What is meant by activity-based budgeting? Any idea? What is meant by activity-based budgeting? Budget, very simple definition. Don't forget. Budget will be prepared based on activity-based costing. Excuse me. If the company does not have activity-based costing, then you can't go and advise for this company to go with the what? Activity-based budgeting. The activity-based budgeting which is prepared, the company which is using what? Activity-based costing, because activity-based costing is a base to prepare what? Activity-based budgeting. Instead of focusing the what? Instead of focusing the what? Cost object, we focus the what? Activity. The budget will be set for what? Activities. Then only you would be able to identify the cost drivers. Am I correct? Put a star mark and write. ABB is a budgeting method where ABB is a method where costs are allocated, costs are allocated, based on activities that drives the expenses. Right? Also, ABB analyze the actual activities that consume resources. That consume resources. Here, cost driver is forecasted. Cost driver is forecasted for the activities. For the activities. Excuse me. Don't forget, whenever you get a questions in the exam with regard to the activity-based budgeting, first check whether the company is using what activity-based costing. Then only activity-based budgeting can be what prepared. Without having activity-based costing, you can't do a what activity-based budgeting. So, what sort of a company that you can recommend to go for our activity-based budgeting? Which type of a industry? No, because there are two types of industry. One is a manufacturing, other one is a service industry. Which company that you tell me first, which company that you would recommend to go for an activity based costing when compared with the traditional costing? No, I'm asking. I'm sure that you didn't understand my question. I'm asking from you all, which sort of a company that you would recommend? I'm not asking whether the automobile or what do you call a service industry or manufacturing company. But I'm asking which company that you would recommend, not which type, which company that you would recommend to go for an activity based costing. The company which is having what more overheads. So that company only you would what recommend to go for a what activity based costing. It is the one of the best method of what pricing for the product. In other words, charging the overhead properly what to the products portfolios. Therefore, activity based budgeting also should be what recommended the company where they are having a what more what overheads cost, more what overhead cost. Right. Next one is there are two ways that you can prepare a budgets. One is what bottom up approach. Another one is what top down approach. What is meant by bottom up approach? A bottom up approach. Another name is what participative budgeting approach. Participative budgeting approach. What is meant by bottom up budgeting approach? Very good. Very good. Very good. Where all the budget holder have an opportunity to participate in the budget setting process. Budgeting process where all the budget holder have the opportunity to participate in the setting their own budget. You remember we talked about the hierarchy of the company. First, top management. Second one is middle. Third one is what? Operational management. Generally, the budget which would be set by the what top level people and would be passed to the what lower level layers. That is exactly happening. But when it comes to the participative budgeting, it does not mean the budget would be set by the lower level people. When they are setting the budget, there will be a bit of an involvement of what lower level people too. That is what is known as bottom up budgeting. What are the advantages for bottom up budgeting? It may be tested when the exam. Very good. Employees will be what? Motivated. They feel themselves that I have what involved in budget setting process, right? What else? Sorry. Of course. Very good answer. Because if you look at the company hierarchy, only the bottom level people they are dealing with our customer. They only know the exact what is the customer requirement. Am I correct? They know the ground reality. Am I correct? So if you are taking the advice or the opinion from the low level people, it's very easy for the company to achieve the what company's objective. Am I correct? So these are the what advantages of what bottom up budgeting. What are the drawbacks? What are the drawbacks? Manipulations. What sort of a manipulations? Rather writing the it's a manipulation, you can come up with some strong answers, no? By having a bottom up budgeting. What is the time consuming, no? Different people will come up with a different opinion. Am I correct? Then it will lead to a conflict. Am I correct? And also what more complex this is. More time consuming, more complex. And one more very important part is what? It will lead to a budgetary slack. Do you know what is meant by slack? Budgetary slack. We talked about what constraint slack, binding constraint and non-binding constraint. Only non-binding constraint is having a what? Slack resources. Slack resources. What is meant by budgetary slack means, listen very carefully, deliberate overestimation of cost and underestimation of revenue. Purposely, intentionally, you will overestimate your cost and underestimation of what revenue. But this bottom up budgeting will lead to a budgetary slack. Why? Each and every person where in the company will come and talk about only the company's expenses. Do you agree with me? No one will come and talk about the way of what increasing what your sales. Then what will happen? Expenses, but the marketing will come and say we'll have to go with the what advertisement through the what media. HR says what we need to train the people. IT says we'll have to implement the what new softwares. No one will come and talk about what the way of what increasing the what sales. That's the reason it will lead to a what budgetary slack. Am I correct? Then again, as he said, difficult to arrive the objectives easily. Am I correct? Different people are coming off with a what different opinion, right? Second one is what top-down approach. Another name is what imposed budget. Another name is what forced budget. Excuse me. What is exactly meant by top-down budget? Budget is set without the what? Without the what? Getting budget holders what? Involved. Am I correct? Without the participation of what budget holder, budget will be set by the top level people. What are the advantages? Less time consuming. What else? No budget slack, right? Would be more objective driven. Why? When the top people, when they are setting up a budget, they will always focus on the to achieve the what company's corporate objective. Am I correct? Therefore, it's what more objective oriented one, right? What are the drawbacks? What are the drawbacks? Budgetary? There's no way to get the budgetary slack for the if it is set by the what, top level people. Am I correct? Why? They always focus on more on what revenue than the what expenses. Their corporate objective is what maximizing the company's profit. Employees will be demotivated. They feel themselves. The rules is but very rigid. We are going to work the way that they have given the what guideline. Am I correct? You all agree with me? Then again, what senior management don't know the exact what ground reality. Do you all agree with me? They don't know what is exactly happening where in the customer's requirement and all. Then it's very difficult to fulfill the what customers what require. Ultimately, it will lead to a what? It will lead to a what? Losing the what? Customers. Am I correct? So these are the drawbacks of what top-down budgeting, right? There's one more part. It's not an approach, it's a concept beyond budgeting. Beyond budgeting. Excuse me. Listen very carefully. I'll give you the short and sweet answer with regard to the beyond budgeting. You try to expand it later. I'll try to give you as a story wise. It was, you know, invented by two scholars, right? Through the publications. They are the people who have, introduced the beyond budgeting. I can't remember two scholars' name. What they initially said was they are highlighting the criticizing the what traditional approach. Traditional approach, we will set the target. Am I correct? Then if the target is achieved by the what your employees, they will be rewarded. Am I correct? It's very we are focusing the short-term benefit. Do you agree with me? We will set the plan, right? And this will be also be used for the performance evaluations, right? We are checking and we will using to reward the employees. This budget is used. Am I correct? That is what, but always it is working with with the what fixed basis. It is not suitable for the dynamic environment, because in the dynamic environment changes are taking place what rapidly. On the other hand, if you look at the budget, right, only we focus the financial side. Am I correct? But what is beyond budgeting says, concept says what? Don't focus the short term benefit. Just look into the what? Long term benefit. So to get the long term benefit, company should budget for first to achieve the critical success factor. CSF. You know what is meant by critical success factors. You would have learned that part on the balance scorecard. We will be discussing later also. Therefore, rather focusing the short term, you try to focus the what? Long term. You try to focus the long term to achieve the long term objective or long term benefit, right? Then what you have to do is you have to identify the critical success factor. The critical success factor, to achieve the critical success factor, you budget for the key performance indicators, KPIs. Not always focusing the what short run. Am I correct? Now the performance which would be checked, performance which would be checked, right? By comparing not actual with the budget. The employees' performances, which would be checked not by checking the actual and the budget. This beyond budgeting says what? You try to use the relative performances. What is exactly meant by relative performances? The beyond budgeting says you compare that. Say, for an example, you have a 2, 3 branches. Then, if you want to check the branch manager's performance, you compare between the what branch managers what perform, or you try to compare the what another company. Don't always compare the budget with what actual. So if you are comparing budget with the actual, it is giving you only the what short term benefit. You got my point. That is all about what beyond budgeting. Also, very important part to highlight under beyond budgeting. Beyond budgeting is focusing the what decentralized decision making, because the beyond budgets, it's giving the opportunity for the lower level people where in the company to take what decisions. They are allowing for them to what take a decision to achieve what long term goals. Excuse me. It is much more related for the technology related product. Why the changes are taking place when the market, rapidly. Their needs, wants are changing. Am I correct? So then you can come up with the what beyond budget, right? But it is not much suited for government sector. Why it is not suited for the government sector? Government sector, the focus on the control, no? They always focus on the what control. For instance, let's take a hospital. If you look at the hospital, can we can we ask the doctors and nurses to take the decision? Then if they are going to take a decision with regard to the government operations, the different hospital will provide the what different services. Then it will lead to a what problem. Therefore, the beyond budgeting, it is not suited for the what government sector, because we don't decentralize decision making to the what lower level people where in the government sector. Correct? This is the whole part of what budgeting. So I didn't discuss the flex budget yet. We will discuss the flex budget later. Quickly, we'll do one question from the rolling budget and zero based budget. You'll have to write down the answers at home and bring it to the tomorrow's class. Right? For the time being, we try some OTQ quickly. I don't know OTQ question from the page numbers. Budgets. Let us quickly try first OTQ. The answers. Right. Question 141. Which of the following statement are true regarding activity-based costing? Sorry, activity-based budgeting. Do you remember what is exactly meant by activity-based budgeting? Am I correct? The cost determined using the activity-based costing are used as the basis of preparing a budget. Do you agree with me? Yeah, of course. Without having an activity-based costing, there's no what? Activity-based budgeting. The aim of ABB is to control the number of units output rather than the cost themselves. Is it our intention of what ABB? Are we going to control the output? No, no. Therefore, answer would be only A. Am I correct? Answer is only what? A. Next one. Which of the following statements are true regarding the budgetary system in the performance hierarchy? Performance hierarchy, right? Developing new product in response to the changes in technologies budgeting activity that would fall within the operational planning and control. Developing a new product in response to the changes in technology is budgeting activity that would fall within the operational planning control. It is a operational planning control. That is a what? Strategic planning control. That is a what? Strategic planning control. Therefore, that is wrong. Am I correct? If you look at second, budgetary system as a strategic planning level, look at the business as a whole. Yes, of course, that is correct. Answer is what? Then 2 now B. What is the purpose of what? Flexible budget? What is the purpose of what? Flexible budget? But we'll be learning. We'll be learning. For the timing, I'll tell you the answers only. I will teach you what is exactly meant by flexible budget. To allow the budget to be produced for virtually any level of production, to reduce the total time, no. To allow the management some latitude, no. To eliminate the cycle fact, no. Answer would be A. Answer would be A. To allow the budget to be produced for virtually and level of production. I will explain that, but no worries. Which of the following statement are true regarding feed-forward control budgetary system? I have explained feed-forward. Am I correct? Feed-forward, you will first plan your future cost or revenue, right? And you will compare that plan one with our budget. There's no actual involvement, right? Feed-forward control system have advantage over other type of control in that it establishes the how effective planning was. No, no. Feed-forward control system have an advantage over other type of control in that it establishes how effective planning was. No. How effective planning? Planning will be compared with the forecasting. How can you say how that our plan is what effective? That can be done only with the what? Feed control technique, not with the feed-forward control technique. Am I correct? Feed-forward control can start as soon as no. He can't get the what? Actual for the what? Feed-forward. Both are what? Wrong statement, I believe. What would be the answer then? 1, 2, either 1 or 2. Am I correct? Right? Question number 145. While a drag and drop style question is impossible to fully replicate within the paper-based medium, some questions of style have been included in the completeness. Incremental budgeting can sometimes be an appropriate methodology for setting budget. Right. Seriously, I'm telling you, I don't see the connection between the requirement and the case what they have given. Incremental budget could appropriate when the business growing rapidly. Is it correct? Is it correct? Is it correct? Incremental if the business is growing. Growing means what? The conditions are what getting changed. Can you use the same condition but you had the previous one as a base if it is growing? No, no. Apply to the total sales in the international seasonal business. No, no. Seasonal business, once again, we can't go with that. Am I correct? Apply to stationary cost. That's true, no? We can apply to the what? Stationary cost, right? Apply to production cost. The business is stable. Yes, that's okay, no? If the business is stable, that's correct. Apply to production costs, I don't think that that is suited. You know why? Uh, Business, sometime it may get changed, no? Am I correct? For administration cost, when the experience of the manager is limited, is it correct? For administration cost, when the experience of the manager is limited, that's correct, no? If the experience of the manager is limited, so we can't go and start with the what zero based budget. So then we can go with the what incremental budget. Therefore, what I would suggest, we can apply for the stationary cost because that's very small amount now, right? Then we can go as a what incremental. Uh, Business is stable. That is perfect answer. Business is what stable. That is perfect answer. For administration cost, when the experience, that's also correct. But the production cost, I don't think, because why I'm telling the problem with the production cost, uh, production cost may get changed, because the changes are taking place where in the market repeatedly. Am I correct? Stationary cost is very small amount. It can be. Which is the following best described as an incremental budgeting system? Incremental budgeting system. A system but only for the extra cost associated with the particular plan. A system that budget for a variable manufacturing cost only. No. A system that prepares the budget only after the manager's responsible has justified the continuous of the no. A system that prepares the budget adjusting the previous year value by expected change. Yes, that's the perfect answer. Perfect answer. Activity, price and inflation's effect. That's the definitions of what incremental budgeting. Am I correct? Next one. Which of the following is an advantage of non-participative budgeting? Non-participative means what? Imposed budget. Top-down approach. Top-down approach. As compared to the participative budget. Non-participative means what? Top-down budget. Top-down budget is what? Is it increasing the motivation? No. Less time consuming. That is correct. It increases acceptance. No. It doesn't increase acceptances. Why? You don't know the ground reality, right? The budget produced are more attainable. No, not at all. Therefore, less time consuming. That is the one only advantage. So these are the OTQ questions. Let's quickly start off doing what some 20 marks questions. This is the question that we are supposed to do now with regard to the rolling budget concept. And one question that I will give it to as a homework with regard to the zero-based budgeting. We'll fix it as a what homework. because there's a chance of getting those type of questions by the exam also. This is December 2010. Three hundred six zero based budgeting. It's your homework. Now you can try the other questions. First, can you all read that question? Static, static company. December 2016. So the way I have explained you the rolling budget, you can go with the same method, right? Right. Can you all try this question at home? There are two questions. What about online? Is it possible for you to try at home? Or if you are going to try now, I can wait. No problem. Then I can explain. Anything that you want me to explain on that questions? I can explain if anything that is needed for you. Right, you just try at home, right? This question we will discuss tomorrow sessions. These questions, and please try to do a homework which I have given us with regard to the zero-based budgeting. Then you can develop the but your writing skills, because most often that is tested when the exam zero-based budgeting. Right? Thank you very much. See you what tomorrow. Tomorrow, right after completion of these questions, we'll be starting the flex budget. Then we'll be doing a 120 marks question. Then we will talk about the analytical tools, correlations, forecastings, least square technique, right? Thank you very much. Thank you very much, online students.